is Jeff Roth. I'm with Commercial Finance Advisors. We do small business loans as well as commercial mortgages nationwide. And in this video, I'm going to be talking about general solutions to being declined financing. Note that this is just one section of our report. We're doing it, this is almost like a table of contents of the total report. So the report itself can be found on our website, and it goes in depth into each individual issue that causes decline for financing. So I think that in general, one of the major solutions out there is to just find banks that are funding loans. That probably 50 to maybe even 70% of the banks out there are just not even actually doing anything. If they are doing anything, they're cherry picking to the extreme. So one of the general solutions is just to get out there, keep looking for banks, and eventually, you'll find one that's actually doing loans. The second point of this would be that some banks, what one bank may consider a weakness, another bank may not look at it like that at all. I think a great example of this would be liquidity. Some banks want to see 6 to 12 months worth of reserves on your personal financial statement or on the balance sheet of your business, while other banks won't actually put that much emphasis on this. So, another example of this would be special purpose properties. There's many banks out there. If your building that you own or you're trying to buy is, a hotel, restaurant, gas station, heavy manufacturing plant, they won't even want to talk to you. While other banks will actually specialize in that property type. So, a lot of this is just finding the proper fit between your business and the actual funding bank. So as far as the overall solutions that we talk about here on the webpage, there's basically two different types of solutions. One would be a compensating factor, which is just general strengths that may or may not be related to your actual issues, and the second would be specific solutions to your specific challenges. So regarding compensating factors, I think that a good example would be good experience or great experience, good liquidity relative to the loan amount, good loan to value, etc. So you can go down the list, basically sit down, think about what your strengths are, and as you talk to individual bank loan officers, if they have any concerns with your file, you can just basically mention your strengths to try to get them over the hump, whatever the hump may be. So the second set of solutions would be more of a specific solution to actual issues that you have. For example, a really, really common reason for decline right now is declining gross sales, meaning that over the last couple of years that your gross sales have gone down, and obviously most businesses out there have this challenge, and ironically and sadly, most banks will decline businesses just because they do have declining gross sales. So one of the solutions, you need to find a specific solution to that, and a good example of that would be to demonstrate that your year-to-date wise that your gross sales have gone up. And a good way to do that would be to put together a trailing 12, which is basically a profit and loss statement that goes back 12 months, and it shows your profit, your gross sales, as well as your expenses broken down month by month. And if you are starting to stabilize or maybe on the increase, that's a nice way to demonstrate that, and hopefully will be enough to get the loan officer to agree and to think that your file is, quote, credit worthy. So I think in general, know your strengths, promote them, keep looking for other banks that are more aggressively funding. Remember, what one bank considers a weakness, another bank may not, and may actually consider it a strength. So keep going, don't get discouraged, and we wish you the best of luck with your search for financing. Thank you.